What's up, Will? How's it
Just
going?
chilling, bruh. Yeah, AFC is gonna run to the moon this week, boys.
Hoping
Let's see
for
what
you.
happens.
We are hoping for you. AFC and GameStop, right?
Yep. Lottery ticket.
And Tilray. And Tilray.
Oh, I already
Tell
cashed
Ray.
out.
Oh
Already
shit, that's
cashed
right.
out?
Yeah, I took a loss on the calls, and then it ran up. And then remember, we all bought in.
Yeah. So futures. If anything, futures is looking green right now. Futures is up 13 points. So that's a good sign for the market being green tomorrow. Let's,
Okay.
Do you guys really think this is gonna get all-time highs,
Hey,
guys?
Jimmy. I think it's I don't know, man. I think it's scary because it's been at all-time highs. It's been at the highest I've ever seen it.
It's going higher.
I think it's gonna. I honestly, Jimmy, dude, I really want your opinion, bro. I think it's gonna do a quick spike up and pull back real hard.
No, I don't think so. I mean, again, I've been stressing $1.9 trillion, no joke.
Yep, $1.9 trillion. We're, if anything, we're buying our time. So I don't think it's gonna fall anytime soon.
Dow Jones is going to go to
Or-
30. I honestly believe Dow Jones is going to go to 35,000.
Wow. So we're all buying those 400 calls then?
Yeah.
Dow Jones, 35,000. 35,000 is right here. That's pretty high up too.
I know.
Man, we keep pushing higher and we keep going
It's
higher
gotta
and
pull
higher.
back.
That's
It's got.
scary.
Hey, remember, it's got to come back to its moving average.
Right,
Yeah.
right. It's true. Yeah, it might, we'll do a consolidation, but we'll move higher.
Yeah.
But wait for the consolidation day to freaking load the boat.
Yes, sir. We just gotta wait for it to come back, and do its thing. We can't. No matter what we do right now, we're always just gonna be trying to predict the future. And when you try to predict the future, it's always a 50-50 thing. 50% you're right, 50% you're wrong, and
Yeah.
no, there's no way of knowing. You just gotta trade what you see, and even if it makes no sense. 'Cause right now they're pushing, it keeps pushing higher and higher. It doesn't make any sense, but hey,
It
do
doesn't.
whatever.
But that moving average, remember what Thomas said the other day? How he said that it has to snap back to the moving average.
Yeah, I mean, yes, it has to snap back, but at the same time, we don't know when that's gonna happen.
Right. We don't know
We can
when
only
that's gonna
see.
prepare for. But I'm saying prepare for it.
Yeah, we just gotta prepare for it. That's all we do. For me, at least, I'm hedging the crap out of all my positions, and I'm trying not to add too many stocks that are already like super close to their all-time highs. And so right now I'm not buying into too many large cap, blue chips, big techs. The only positions that I do have are ones that I can safely hedge, and or positions that have already been in for a long time, and that's where the safety is. So let's see. We never know where this thing is gonna go.
It's scary though. I tell you,
It
man.
is.
I think this week with the quarterly endings and everything is scary.
Yeah. Let's see. So Zong said where he's at, it's too noisy, so he's just gonna be listening in. That's fine. Yeah. So yeah, I'm gonna give it a little bit before we begin, but I don't really have any slides tonight. I don't know if anybody's holding for waiting for some slides, but I don't have any slides tonight because the topic that we chose to, well, the audience chose was basically one that it's difficult to cover. Try to predict what the market is going to do.
I don't know, man. So that's what I think we're gonna hit. I think we're gonna do a swing high. I seriously believe it's a swing high play. I think this $1.9 trillion that we got is it's gonna be a swing high play.
Yeah. Man,
And look, if they put that one, because you have to think about the bear. I'm just trying to state my case. Is you got to think about the bear. See how we didn't push through, Ken? You see how we didn't push it
Yeah.
all the way through? See, I think we might just do a swing high, do a double top, and drop.
Yeah, at this point, I don't know what is gonna happen, but I saw it close Friday like this, right? And it opened up today. This is the last 3 hours or whatever, like 4 hours, and it opened up. It tried to go higher, but I'm not really happy
But it
with
didn't
this.
finish the cup and handle, though. You see it? It didn't finish the
Yeah.
cup and handle.
So this right here, I'm not really
Yeah,
happy with this
finish the
because
handle.
this isn't for sure a breakup yet. Where it's gonna break out of this range. If anything, I want to see it test this level again and
Right.
see what it does. So right now, this is kind of dangerous.
Yup.
Yeah. Tomorrow, anything can happen. Yeah, we can go to sleep. Some happens, and we just it. But at the moment, we could just take what we can do. And at the moment, I say the safer bet is just a sideline until we know for sure what's gonna happen. Because honestly, I don't like what I'm seeing.
I think we rally way too fast. I don't know if anybody believes me, but I think we rallied way too fast.
Yeah, because you see this. This was COVID last year, right? This part here.
Right.
This was COVID last year, and boom, we just as soon as we went down, and we just shot back up like nothing has happened.
Right.
Like I have
And
never
that-
really seen
And we
anything like
never
this.
even reopened back up yet. Like, how can we be at all-time highs?
Yeah. So I don't know if you guys have any other thing to put in. Jimmy, do you have anything to add to that? Or what do you think is happening?
I don't really have much, but the market's always forward looking, right? So you know exactly what will happen when you receive the 1400.
Mm-hmm.
People will spend the money.
Yep.
Right, that's gonna 1.9 is going back to the economy. At least most of it will go back to the economy. So it's Ford investing. I'm shooting for 3,500. Yes, it is a little bit high, but right now, I think you got to trade based on investor confidence. I think confidence is back. Even me, as a conservative guy, on Friday I push 100% in my conservative account. So I'm gonna try to ride the S&P for another 5-7% before I scale back out. Because if you look at the S&P, they on annualized they return about 10 to 12%, right?
Yep.
So if we can, I think so far this year we're up 5% already. So we can move another 5%, 7%. I'm out. I want to reduce at least 50% of my positions.
Yeah, understandable.
That's the game plan that I have, but
And honestly, that's all we can really do is we just have a game plan and then just stick to it. There's really not a way for us to really know exactly what's gonna happen and how to play it out, right? And so all we can really do is just say, hey, this is what I'm gonna plan for. These are the levels I'm seeing. I'm gonna aim for it. If it makes it, I'm out. And if it doesn't, I have to plan for the downside too, and make sure that I don't get killed, or I have to have another plan other than, uh, um, maybe my plan is to hold this position long term, or my position, I cut it at a stop, take a small loss and just
yeah.
go on from there.
Hey, Hey, Kang or Jimmy, can you guys teach me a little bit something about how the rates are affecting how rates affect the market?
Well, we have a lot of corporate bonds, right? Think of it this way: if the rates are up, that's less. That's less. The bottom line will be affected. So it costs more. It costs more to borrow. I mean, I don't know how much corporate bonds are out there, but there's plenty. So any movement can really take the bottom for corporate America. So when it affects that number, that's less profit for earnings, right?
Mhm.
But bonds are controlled by the Fed. You do have to worry about it, but it's manipulated. Everything is manipulated. I wouldn't worry too much about it. You just gotta know when to hedge.
So let's break it down even more. What exactly is a bond? Like dumb it down to the most basic level.
Yeah, could you
So
do that, Kang? That'd be badass, bro.
so so
You're talking to the freaking tutors here.
yeah. So a bond. My understanding of a bond is basically it's like a contract that says, hey, I have X amount of debt and I'm going to pay back this debt. A company is going to pay back that debt to you with some interest after a given amount of time. And so that's basically what a bond is in short. And so when um, when bond rates and bond yields, bond rates go up, that means that the money that you get in return for buying those getting those bonds, right? Basically an IOU from a big company or big bank or the federal government, right? Well, the interest or the money that you get in return for your money invested increases. So how that affects the stock market is if those yields, which bonds are considered more safe, right? Because they're IOU that has to be repaid in the future. They're considered more safe. So when those yields go up, right, the rate of return goes up for them. People are more likely to buy bonds because
Mhm.
bonds are considered safer, and so they buy those IOUs, and someday in the future they get paid back that their investment and then that interest. So lowest level, that's what a bond is.
Yep.
Thank you.
So yeah, so corporate bond rates going up is actually a thing that impacts the market negatively because people aren't going to be buying the shares anymore. They're going to be saying, "Oh, I get more return, or I get a more stable return, and a little bit more than 0%." Right now, it's like at 1.6. You get 1.6% return, and for something that's very low risk. So let's go ahead and do that. Right.
Bonds are, loans from the Fed.
Mm-hmm.
They raise interest rates or they raise the yield. That, again, like I said earlier, that's going to affect the bottom line for corporate America. So it's less profit, right?
Yep. Less profit for because they have to. If you have debt, you have to pay those debt back, right? And
Right.
uh, as something that we don't talk about is as stockholders or shareholders, we're basically last on the totem pole to get paid for anything, right?
Hmm.
We are the last ones considered for, especially if you're like if a company's paying dividend, they're the last one considered when all that profit is taken into account. So that's one thing to keep in mind too, is that yes, you have voting power if you hold shares, but at the same time, your interest is also the last one taken into consideration.
Hmm.
So all right, I think that goes into what we our topic of tonight too. Our topic of tonight is trying to predict stock price going forward, or based upon current events, shorts, based upon volume. You know, one thing that we really have to pay attention to, and one thing that's been affecting the stock market over the last 2-3 weeks is bond yields. And when those increase, we have a understanding that if bond yields increase, then stock prices will decrease.
Mm,
Now we're actually last week we actually approached 1.6, which is pre-COVID bond yield rates, and that's alarming because nothing really has changed about our economy. Nothing has really. Things are starting to open up, but we're not really pre-COVID yet. In terms of work, in terms of how the economy is.
mhm.
So yeah, that's one thing that affects market price, and one thing that you can use to try to predict market movement is uh bond yield. Bond yield
Yep.
goes up, stock market price goes down.
Let me ask you another question. How do you use that with your Tesla stock? Like how do you play that with your Tesla stock?
Bond yields.
Yeah.
Well,
Like do you use the market to judge your positions?
me
Or
honestly,
how do you use the market to judge your positions? Like if the
I
test
don't.
like
Okay, let's pull up the chart. So me, I don't pay too much attention to bond yields because I don't have control over them. They go up, they go up. What I just pay attention to is I never know when the price is gonna rise, but I pay attention to the news articles that are released related to bond yield. Because as soon as I start hearing that, hey, the yields are going up, chances are they're not going to just lower. They're not just going to go up and then down and up and down, whatever. They're gonna go up, and the next time they do a reporting, maybe they raise it up a little bit more, or it stays consistent, right? So it's always goes in that pattern. When you see something go up, it's gonna go up, 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 maybe flat for a little bit, then up for a little bit, and then it goes down. So when I start hearing initial news about the bond yields going up. What I was starting to do is, especially if I have largely into like a stock like Tesla, right? Something that's been up for a long time. I hear those news and I have to start looking to see what's going on, in terms of what the stock is doing. So I'll take a look at it. Maybe you hear the yields is going up. Start noticing, hey, the price of Tesla hasn't been really pushing, right? Hasn't really been pushing higher. It hasn't really been pushing higher for a number of days. Oh, hey, I should take that into account, and hey, maybe I should start hedging that position because previously, before any of that news happened, it was just climbing. It was climbing like crazy, right? So when that news hits, hey, I noticed a flat line on Tesla, and then you see it fall. And then when you see it fall, of course nobody knows when it's gonna fall. You see it fall, and then you react to it,
Yeah.
and say, hey, this is the first fall that broke some support level, uh, and these are the news articles that I can pull up to support that fall. And what I think is going to continue to happen is, hey, maybe the price is going to continue to fall, right? So in conjunction with my position, that's what I did. Is just notice, hey, what's happening in the market? What's happening with bond rates? What's happening on a global scale? And what can I do to limit my risk or to cap my downside?
Mhm.
But yeah, to catch the exact fall, the exact moment when it falls, nobody is really able to do that. It's better to be maybe 1-2 days late in doing it than to notice, hey, not do anything, right? You're not gonna catch the exact top, and you're not gonna catch the exact bottom. But hey, the middle is one juicy piece.
Since 1980, the bond yield The 10-year bond yield was over 15%. From there, it has declined. Some suggest that short-term bond is going to go to 2%.
Mhm.
The Fed is going to buy all the bond.
Yeah,
We're
and
so dependent on the Fed. It's not even a joke anymore.
they keep printing money, right? They're a printing machine.
But this is our printing machine.
Yeah.
I don't know. I look at the market differently. I look at the market as this is a beast, and all we're doing is feeding it. And now it's just time to eat.
Mhm.
Yeah.
Yeah.
it's
So
bad.
all you can really do, to and trying to predict price of a stock, man, the best you can do is be 50-50. You're never gonna. You can go a little bit above 50-50, but not much, because if you're trying to predict stock prices, the best you can do is 50-50. Anything can happen. We don't have control over any of the news or anything that could happen.
Yeah, I think right now, I think the only way to predict the stock prices right now is just like I think for what we've always been looking at is just watching the order flow come in.
Mhm. Watch the order flow. If volume supports, like when you see huge, like here, right? If
Yep.
you see huge volume to the upside,
Yep.
don't fight it. It might not make sense at the moment.
Mhm.
If it doesn't make sense to you and it scares you, it's okay to be a little late to the game. Nobody's putting a gun to your head and saying, "Hey, you got to get in at the exact bottom." No, it's like think of it as like a global poker game or something, right? And you can, but better than poker, you don't have to place all your bets before knowing something is going to happen, right? Let the market show its card, and then you decide what you want to do, right? You can let it have a couple green days, and then say, hey, okay, I see it's continuing to make a green day, uh, continue to make gains. Let me take a risk on the upside, and let me draw a line in the sand where, hey, if the market falls down, like let's take Tesla for an example.
Right.
For an example here, you see it making green days, and you say, okay, let me take a stop right here. Right, put a stop right here, and if it continues to go up, let's go for it. Let me. My dog's going crazy. Let me check out. I'll be right back.
Yeah, Nasdaq is gonna try to get back to the high.
Yeah, it's trying to get back to the high and break it. I just hope we break it and hold it. That's what I'm afraid of. I'm afraid that we might break it and the bears come in and take all the money. That's what I'm afraid of, dude. I'm afraid of us just breaking it because I look at it as if we haven't done anything for us to go this high.
It's forward investing. I think the stimulus will last about 6 months.
Yeah. I mean, to add to your concern, well, of course, the economy hasn't recovered enough for us to justify this move, but
it doesn't, right? It just doesn't.
But we can't.
It's psychology.
Us as traders, we can't just say, okay, this doesn't make sense. Let me not do anything about it, right?
Right.
We can only do what we see.
But if you can see at Tesla, you see how it got rejected at that support line.
Mm-hmm.
Right there, it just got rejected. See how that candle closed? That's what I'm afraid of. I'm afraid of it just pushing up and then coming right back down.
No, it's gonna go higher. It's gonna get past the 20.
Yeah. So,
but we have to close above the 20, though. That's the problem.
And it will. It will.
And
I think if we close above the 20, stay above the 20, then I say it's the next bull run, and we load the boat.
1 second, okay.
Oh
But
no.
you think that too, Jimmy?
I think
If it
Tesla.
passed that support line, right? If it passed that resistance, that means we're on a bull run. Which means
Right.
that Willy Wonka I tell you guys about, that means we're on a bull run.
Yeah.
Hey, what's up, Ken?
It'll pass. It'll pass. Nasdaq and Tesla, they pretty much move in the same pattern. So if you believe Nasdaq will go higher, I think Tesla will go higher. And if Tesla has any independent sentiment or good news, it'll go higher. You saw that 100 point that bounced back real quick, right? 100, 150 points.
Yep.
So people are buying up.
Man, I wish I wish I would just bought Tesla at that level. That was a sweet bounce.
Yeah. If you believe in Tesla, I think Tesla will be worth more.
Sorry about that, guys. Back. So
It's cool.
Are we looking at Tesla?
yeah, we were looking at Tesla because we were talking about how if we see something that bounce off like support, then it kind of almost gets rejected by this resistance. So
Yeah, by the 20 day, it got rejected by the 20 day.
mhm.
And Kay, I'm sorry, just you know me, I'm a technical guy. So I just see it rejecting the 20, and you see how the 50, because that's your 20, your 50, and your 200, right?
Yep.
Yep. See, but you see how it closed. You see how the 20 is under the 50 now, and
Yep.
then it got rejected by the 20. If we need to push through there, and we have to change that line to cross again. If we don't change that line across, we're going down. But if we change that line across, if we do that Willy Wonka I tell you guys about, and then it's a
Yeah.
fine.
Yeah. At the moment, if we're I mean, both you and me are technical traders, and if we're fundamental, yeah, we're fine with Tesla, we're doing whatever. But if we're technical, yeah, that's what we're waiting for. We're waiting
Yep.
for price to close here because
Yep.
this zone right here, this is a danger zone. Price
Yep.
is gonna bounce back and forth in here for whoever knows how long. And we can't do anything. The only way we can try to predict price movement is to just look at the volume. And we see volume's been dying off too. We see a rush up, then we see volume just dying off up and when it's around this top. So what that signals to me is a resistance that doesn't have that much power. So it's probably gonna drop to the downside for a little bit. But what is it gonna do beyond like the next 2 weeks? That's for sure unknown to me. We can look at all the data that we want, but no one can clearly make that prediction. Best you can do is take a guess, right? Take a guess, maybe set some stops here and there. If you believe that Tesla's going to go up higher, and you are pretty aggressive, you can set a stop here at 650. If
I
you're
think
a
it
little bit
will.
more conservative, you put a stop down here and just let the trade do its own thing. That's the only way you can make a prediction. Is
Yep.
if you don't really care, you have your protection. You have your what I like to call the dummy insurance to the downside that hey, gets you out if you're wrong, right? Your stops here or here, that you don't care about, and then if Tesla runs, it runs. If it doesn't, hey, you get out with a small loss. Right?
Yeah, I guess you see exactly what I see too. I'm just waiting for it to cross there. If it crossed there, bro, this coming week is a bull run.
Yeah, for sure. And if you're a technical trader, all you can do is just look at what price is doing around your technicals, and all we're gonna say is since we are trading with since I trade with the 50, the 200, and the 20, I can say that hey, if price goes above this 50, the 50 and with the purple line and the light blue line, the 20 is above the 20, the 50, then hey, price is more likely to increase upward. And maybe I can take a little bit more risk then. and say, over time, price is going to continue to go up because this is X, Y, and Z. Something like this. This X, Y, and Z, right? See something like this. Hey, over time, price is going to go up, and that's my prediction. That's all I can do. Because you can see, volume. Yes, volume plays a role. These light bar, blue bars right here are volume. Volume plays a role, but we've seen where volume has been high when it goes up, volume has been high when it goes down. So it's not a true indicator, or it just supports the move for a little while, like in the short term, the day, a day or two. That's it. We can't really use today's volume or even last week's volume to try and predict it for the next 2 weeks, 3 weeks. We can predict 1 or 2 days at best. Yeah. Jimmy, do you have any insights on how you try to predict price action or stock prices?
Not really. I just believe Tesla will be higher. Try not to think too much. You can read all you want. If you don't, I just think the valuations will be higher.
Mm-hmm.
The market can play any way it wants. I mean, Tesla has been down because of the narrative that they're trying to play, where the bond yield is going higher, right?
Mm-hmm.
And we also had a Nasdaq correction. So Tesla is very volatile these days. It's in the S&P 500, it's in Nasdaq. Maybe it's also in the Russell as well. But when the broader market is going down, it's going to take Tesla along with it.
Yep. And that's
especially for growth stock, right? I mean, Apple went down as well, so I'm not surprised by this move.
Tank, would you end? Can you put the mouse where Tesla ended the other day? What did it close on Friday?
It closed on at 693, 73.
693. So 693. So do you believe that it will close higher?
So tomorrow?
Yes.
We'll
do you think
see.
it will push through? That's what I'm saying. Do you think the price action with the stimulus coming, right? The stimulus coming, because that means some people should have gotten it over the weekend. People would probably get it overnight, and that's supposed to pump the economy. If that's the right play, right? If that's the right play, so that means tomorrow Tesla should open, should test Friday's low. We should turn around, and the moment Tesla goes above the open, we should buy, and then we should ride it back to its high.
Yeah.
Oh, I'm not sure, but
right? Does that make sense though? If I was a trader, that's literally strictly trading the technicals.
If you're a trader, this daily, like a day trader, this daily chart is just kind of noisy to you because you're trying to capture trades within the one candle. So you
but I'm saying if we swing that, wait for the entry to swing back. So if you look at the chart right there, if you let it swing back tomorrow, back to your 200-day moving average, that's where you get in and right back up.
Yeah. If it falls down to that 200, yeah, for sure, I will try to get back in.
No, but on the daily though. I mean, on that 5-minute chart, the last chart you looked at.
The 15.
Yeah, the 15. Yeah, or the 1 hour. Go to the 1 hour. Go to the 1 hour. See where it's at the 1 hour.
Right here is 6.
Right. So you look at the one. If we go off the 1 hour chart, you see how everything's starting to line up.
Yep.
There's going to be a bounce here, up or down here, real big, because it's starting to line up. So if we judge by the 1 hour, if the 1 hour starts that bull run, then play those candlesticks.
Yeah. So this is actually. Let me pull it up. I have the patterns.
Bro, perfect pictures. Love those pictures.
Yeah, and these patterns,
love those pictures.
Yeah, as traders, these are the patterns that we look for. We try to predict price movement based on these patterns. they're pretty. They happen all the time, and they don't predict the price of stock 100% of the time, but they give you a good indication of what's happening. And this is what we're seeing right here. On the 1 hour, we're seeing a bullish rectangle, meaning price has gone up and price has been staying in a range, and we're trying to try to catch them
And
upside.
it's building the bull flag, right? See the bull flag is building.
This right here, this is what was happening, and you can see this is how most people will play when they see that pattern. They set a stop below that range, they get an entry above it, or they can get an entry like down here, right, and set a stop a little bit further down, and their target will be somewhere above it, above that range. So, these are patterns that as traders you should be
Go
paying
to the next
attention
one,
to.
Kane. Kane, go back to the last one.
Mhm.
Go back to the last one. Yeah. Go. Yep. No. Go back to the last slide. The last picture. The bottom, the ascending triangle. Go to the ascending triangle. That the left one.
This one?
Yeah, that one. That's the pattern we're at with Tesla right now.
Yeah. And
Yeah. If you look at Tesla,
actually,
so that way you can show the guys that that's the pattern we're on.
yeah, this is the pattern that I'm seeing on the daily. This is the rising wedge.
Right,
And
but
you
I see it on the 1 hour. It's the ascending.
so
See?
on the 1 hour, so you can see, okay, so if you look further out, that's the ascending triangle. But if you just focus on this day right here, it's a it's a bull flag. So
Yeah.
no matter, depending on how you look,
Well, no. Depending which time frame you are trading.
yes, depending what
That's
type
the
trade you
major
are.
key, right? That's the major key, right? Which
Mhm.
time frame are you trading?
Exactly. And things like that. So yeah, I'm a day trader, not a day trader. I'm not a day trader. I'm a swing trader. I look at the daily, and when I look at the daily, I say, "Oh shit, this is right here is a rising wedge, or
Yep.
so like this right here, rising wedge, right?
Yep.
In formation. If you are a day trader that only focus on like a day, right, or a few days, right, you will see, hey, this pattern has forming. This is a bull flag, but you also can't, you might not be paying attention to the full picture of
Right. So okay, so you're right. So you look at that as a bull flag. So you go back to your daily. So you go
Mhm.
back to your daily because you know that on the 1 hour it's a bull flag forming. So you go back to your daily to confirm it.
Yes. Higher time frame confirms your direction. The lower
Yes.
time frame is where your entry.
Yes. I love you guys. Just to let you guys know that.
Yeah. Let's see. So Kevin asked, the FOMC meeting is Tuesday, Wednesday. How does that affect the overall market sentimental? What is it? That's the I don't know exactly what is FOMC, but I know that
That's just the Fed. That's just the Fed talking, right?
yeah,
With their making their decision.
that is, man, I feel like all those, not I feel, but I see all those meeting as wild card events, right? Most of the time the actions are completely opposite of what you think is going to happen, right? You think the market's going to climb afterwards, it could have dropped, so meetings like that, they most of the time I see people play them. They play it like a few days before, or they play a few days after. They don't play they don't play right when the meeting is happening, because when the meeting is happening, it's probably already priced in. People think that the market's going to go up like however long, that maybe they're already all into their long positions, and when that meeting happens, they dump everything, right? I've seen that happen, and so the best thing to do when you see a meeting like that happen is know it's a wild card event, and try to stay clear of it until after the meeting, and that's when true direction will actually take place again. Because before that, people are gonna just say, oh, this is it's gonna go to the upside or it's gonna go to the downside, and they're gonna, whip blast you back and forth. So that's how it. How does it affect the overall market? It's a wild card event. Anything happen. It's like earnings, right? You get good fundamentals, you get good earnings. The stock could fall, and stocks have fall. Like take Disney for example. The last earnings for Disney caused it to fall, right? Right here. So it fell before and then it shot up after. So anything can happen. Bad earnings, it could climb. Good earnings, it could fall. You don't know. And the good, if you see like price going one way or the other before earnings or before any of those meetings, the Fed meetings and stuff, um, maybe prepare for a dump. Or if you see it keep falling for like a number of days, maybe uh a market the market decline. People gotta cover. People also gotta get out of their calls or their shares or whatever, their short term trades.
Yeah. So, like in my situation, I have calls that could be expiring in April, May, June. They're fairly short term, right? 1 to 3 months.
Mhm.
I guess I'm just kind of curious, like how does an event like this? I know you're addressing it, but like, am I just going to be going along for the ride then? With most of my plays.
Um, so your place, you have calls, right? 1 to 3 months.
Mhm.
So something like this happens, and like right now we have two things that we have to keep in mind, right? We have bond yields that are climbing, right? Which negatively impacts the market. But we also have a stimulus, $1.9 trillion that's entering the market. So we have two events that are like literally butting heads. So for us to give you a clear answer and to have a clear answer of what's going to happen, we don't know for sure. But just if
Right.
you play just off of what you've been seeing the market do, like price action, right, rising for a few days, best thing you can do is maybe know where you're going to get out, right? And don't just hope for that that SPY is going to keep going up, right? So if you have like for example, you got calls like down here at 380, um maybe ask yourself where your break even is, and from your break even uh try to reach a target, and once you hit that target, just get out, right? Don't try to hit
Right.
home runs when there's too many events going on, like too many global events that not global, but too many like the stimulus and the
Right.
bond yields raising. If those events are still in play, anything can happen in the market. We can wake up tomorrow and the market just completely tanks, or we can wake up and because of the stimulus and what it's going to do to the economy, we could see a run to like 400, 500. But at a time like this, where there's too much going on at once, right? There's no clarity. Don't plan to stay in the market long, especially if you are in an option trade, because it could really hurt you, right? Try to take it day by day, right? And if you have more time, like 6 months, you could probably weather this storm. But if you have like a month or 2 months, it might be pushing it. You can't weather it out, right?
Sounds good.
Yeah. So things like that, it's Lau is saying in the chat, 1,000% or zero. And events like this, it could be 1,000% or zero because we don't know what's gonna happen. And if we wake up tomorrow and SPY all of a sudden gaps up, right? It goes from 395 to it opens up at 400. it could be your big day, your big payday.
Man, I'm trying to get away from 1,000% or nothing, man. That just being completely transparent, that hurt
Yeah.
in my
So
first
just
couple months.
yeah, just have targets that just have clear targets that you want to achieve, right? And once you achieve those targets, it doesn't mean you have to get out, right? It just means that once you have those targets, maybe set a stop down there. And if it keeps going, if it keeps going, yeah, that's good for you. You have a stop where
Right.
you're getting out at a win, right? And then it keeps going. If it
Yep.
keeps going higher, keep updating that stop as it keeps going up in your favor, right? So if it ever comes down, you're not completely going back to zero, right?
Right.
Because if we're in this economy right now, we can't. When something this big is happening, we don't know for sure what's gonna happen. The only thing as traders that we know is that if we see the price on the chart, right? We see a pattern and we're just taking a bet on how likely that pattern is to continue, right? So as of right now, SPY has been going up, right? SPY has been going up, uh, and we might take a bet that SPY continues to go up, right? And that's all we can do.
415 per John.
That's all we can do. Yeah. I mean, so Jimmy or anybody who's more experienced, or I see Powell's on here too. Do you guys have any input, or even Zong? I know he's in a noisy area, but do you have any input on how to really try to predict movement?
So from a price action perspective, which say you're scalping, and I do use the time interval. Obviously, it's 1 minute, right? And then I do look at the 5-minute interval to confirm the direction of the trade, right? The longer time frame on it. To me, I look at the transition in the wicks, right, from a change in direction perspective. And so if I'm scalping, that's the window that the two time frame that I'm looking at is the 1 minute and the 5 minute, and I'm looking at where either people are selling, and you see the wick happen basically, and you sort of hit that short-term resistance, or if people are buying, and then all of a sudden you get that short-term resistance there too. So that's kind of how I look at it from a directional perspective on that. But if I'm swinging long, obviously I do the whole supply and demand zone, right? And that's at the 15 minute and 30 minutes chart on there, and I try to enter whether it's demand or supply zone to either short or go long on it. But those are more swing trades than anything else. So if I'm scalping, it's the 1 to 5 minute time frame, and if I'm swinging, it's going to be 15 to 30.
Mhm. Yeah. How so if we were to ask, if how exact do you think your trading is? Like when you get into a position, like how much clarity, or how much of your percentage of being right do you think you have?
So if I'm scalping just a point, I'm about 85% right.
Mhm.
So if I'm looking to scalp a point, and how I approach it is I scalp a point, but I go in with multiple contracts, right? Anywhere from 3 to 5 contracts. And so basically you have your presets on your trading application, right?
Mhm.
And so if you're short, you're already doing your presets already, so that you do your preset trades. So when you enter in that short, it automatically presets your exit to be a point or 4 ticks on there. My stop loss is actually 8 ticks. So literally, I'm betting that I'm going to be in the right direction. Otherwise, I'm going to take an 8 tick loss, right, on however many contracts that I got, right. So that's how I scout.
So you always scalp with a stop loss. Key there, always scalp with a stop loss, or basically always trade with a stop loss in place.
Yep.
Yeah.
And it's only a
if-
point, and it's only a
Mhm.
point, so you can pretty much get a point from price action.
Mhm. Yeah, even when you are 85% sure, right? You still have a stop loss in place.
Oh, absolutely, absolutely,
Yeah.
always.
Uh,
That's a rookie mistake.
Pal, what? Hey, pal, what's the equivalent terminology for ticks when you're just trading the normal equities?
So the normal equities, I don't know. I mean, I look at it as, um, hmm, you would have to. The only way I could see you doing it is if you look at the price movement of that stock and how much it swings a day, right? Some things are not as volatile, meaning like AT&T may not move 50 cents a day, whereas Tesla may move like $150 a day, right? So to me, AT&T may be 10 cents, 20 cents, and Tesla may be $20. You know what I mean? From that perspective. So if you want to do it that way, but you would have to pay attention to the stock in terms of the volume that's exchanging hands and the swings. Then that's how I would, if I was going to try and make an analysis on it, that's how I would do is I look at Tesla for the last 30 days and see how much each day it swings from top to bottom, right? And then from there gauge on what does it mean by quote unquote one tick in your head is going to be equivalent to what. But that's just a guess, from me. I mean, trading futures, I can do the ticks, but from stocks, you're looking at more supply and demand and those types of zones to swing, and kind of like what we're going through over here is looking at the moving averages, right? And when to enter, when to get out. But yeah.
As far as
Cool. Appreciate that.
as far as like accuracy goes, do you feel like when you try to time or basically try to time your longer term trade, do you have the same amount of accuracy with your longer term trades, like your swing trades, if you do any?
It's accurate, but here's the challenge: is that the long-term trades may take either a day to develop, or it may take 3 days to develop. And all the while, as you look at ES or the S&P, is that it can swing. Now lately, like anywhere from 50 to 200 points within 3 days, right?
Mhm.
So the question is do you have the stomach to stomach that while it bounces its way back if you're wrong, right? And if you don't, then obviously you'll take that stop loss, right? So to me, the accuracy is to me less, because I used to swing trade a lot, and that's why I moved to price action, because price action, I know I can get a point easy.
Oh man, you guys have seen this future chart is some craziness in the last two minutes.
Yeah.
Yeah,
So you're doing ES, right? So
Yeah.
go to the 1 minute.
Yeah, this is the 1 minute.
Okay. So you see that candle right there, that green, right? So
Mhm.
to me, that would have told me to get in because it was going to change in direction, right?
Mhm.
But if you look, if I had an 8 tick stop loss, I might have been stomped out. I don't know. I can't see from the screen here.
Yeah,
But
zoomed in.
so how many ticks was that, gang? From if say you entered in halfway through that wick.
Halfway through this wick.
Yeah. So right there.
So right here will be even number 394, right?
Yeah,
394.
394.
This one.
So 392 would have been your exit if you stop
Mhm.
loss So where is it at now?
390 right now. Oh, it just pushed through 390. It's not 392 yet. It's still 390 393 393.8.
Okay. So at 394, exit out at 395, but with a stop loss at 392. So technically, I would have entered in where that wick was. So we'll see if it pans out, right, in the next couple minutes here.
392 is all the way down here though. Are you sure?
What was up there?
Up here it was at 394 here. So 392 is all the way down here.
Oh, no. So you need to take it further, right? So it's 392 something else, right? Let me see here.
394.
So it would have been at 390, no, 39,040 would have been the entry. The stop loss would have been at 39.38.
38. So yeah, stop.
Yeah. So I would have been stopped out.
Mm-hmm.
Yeah. So in that trade, I would have lost.
Mm-hmm.
Now go verify the 5 minutes. See what the direction is. And I look at RSI and I look at the MACD when I look at the direction.
Let me add that on. MAC. It's a standard, right? MACD standard?
Yeah, standard.
Okay. And RSI, right?
Yep.
Standard also?
Yep.
Okay, this is the 5 minute. Let me expand this. Okay. So this is 5 minute MACD and RSI.
All right. So looking at this is that, all right. It looks to with the MACD looks like it's gonna turn back up on there because you look at that volume, right? That volume is ramping up, but then now it's slowing down on the volume, and it's gonna turn up on that. And then if you look at the RSI, it's getting to the point where it's been oversold, right? It touched that oversold part, right? So that's kind of where if you're going to enter in now and then go write it up for a point or two. Because that's the long term.
Do you typically wait for this for the MACD? Do you wait for this to show that it's for sure a smaller volume?
I do. So if you start seeing,
are you just writing the candle back up to retrace?
Yep.
Okay.
Yep. That retracement, and you try to get out at 20 to 30% of the retracement, right? Because when you get to the 40 to 60%, it may, turn directions on you, right?
Let's see if we can go back to a time when something, so like here, right? This is what Hao would be trading. He sees this, right? The push down and then a slight pullback, right? The volume on the RSI is going to decrease. It's approaching oversold here. Then he would try to get a position in here and set a stop down here somewhere, 8 ticks from wherever he entered in this candle. And since he sees this volume kind of dying on the MACD, then he'll write it, and he'll write it to whatever his target is. And he'll try to just capture this little movement right here, right? As much of it as possible. And then he, once he hits his target, he's out.
Yeah, and the big thing is that if you confirm it on the longer time frame, that then to me, you can move your stop loss a little bit more to give it some room to breathe in terms of the trade to develop. Especially if you look at a long time frame where it's moving in the right direction, the direction of your trade. You may, not make it 8 ticks, right?
Mhm.
Pal, how long have this strategy been working for you?
So I did 3 weeks straight before I had my first loss.
Nice.
And so that's kind of why I've been with the chat group. I've been sort of posting up on that. So now I'm gonna say I'm back to about a week and a half of good trade because I've been in and out of just a work and stuff like that. But I committed myself to the strategy and trade only between open and 11 a.m. So when it opens at 9:30, I'll trade at that high volatility, and so you get a lot of volume and a lot of in terms of price action, in terms of a lot of direction changes, right? So commit myself to 9:30 to 11 and focus. So I was able to do 3 weeks before my first loss, just using this strategy. I used to use a supply and demand zone and swing. The problem with that is that I guess I tried that strategy at the wrong time because that was during the Trump days where he would tweet and it would
Right.
go and it would go in a different direction,
Right. Now, can I ask you another question?
So
Because you play off from open to 11, right?
yep.
So you trade from 9:30 to 11. When do you determine how much time do you give yourself before you enter a trade to know which direction it's going for the day?
Okay. So by 10:30, you know the direction. I'm gonna tell you that right now. Or you have a general sense, right? But you have to look at how Asia and Europe trades develop. And you look at patterns, right? Because kind of like I kept track of it was like 10 straight Wednesdays where the market would open, it would go negative. No matter what, no matter how it opened green or whatever, it would go negative before it popped up positive. And so you just, after you trade an equity for so long, you tend to notice some patterns, right? And so like
So you trade one particular stock to be successful in this particular strategy also.
Yeah, I trade the S&P or ES in this case. And so what you look at is that like the news of the stimulus came in after the market closed. And so Asia had a jump on the news. So Asia was trading higher on the news of the stimulus, right? On it. So these are the things that you look for on an equity. Just like example, like you look at Tesla and how people can just pick one or two equities and just monitor it, and you'll start to see patterns develop, see when institutions come in and buy it, right? Because you see these big long candles because of institutions.
In your experience, right? If you had to give me, let's say I'm a new trader, right? Where would you point me to trade first? In your strategy of playing the 1 pips or trying to go back to the swing trading?
If I was to start over new, I would do price action. But to me, people need to understand.
All right, so we're both in agreement because price action and order flow is the same thing, correct? Or no?
Yeah, you could say that. Yeah, because essentially that's supply and demand.
Right.
That's all. That's all price action is: supply and demand.
Okay, so to me, I've always learned that in my little experience that I have, that the best, I always hear people talk about price action and order flow. And I believe that your strategy is the same thing. It's just watching the order flow and just buying higher and buy high, sell higher, right?
Actually, by looking at it, is you see where wicks develop is at. Example, these wicks, like let's go to that big green wick right there. Yeah. So supply and demand, right? So people are selling. And when you get to that wick, you notice that people are selling, but all of a sudden demand popped up to buy more, right? And so you notice that big long wick. And so to me, that okay, there's some people that are in that section there.
Right. The buyers are stepping in. The buyers are stepping in.
Exactly. The buyers are stepping in, right? So that's telling you that, and if it's a hard push, you'll see a longer wick, right? Meaning there's a lot of buyers that are buying. So to me, that's when you go long, right? So to me, catch it.
Right. The next candle tells you to go long.
I would even argue that by the time you catch the next candle, you may be too late. So to me, is that I look for nice long wicks, and I jump in on it to ride
You like to
that
play
point.
the reversal to see if it reverses. Yeah, great. Yes, I see your strategy.
Yep.
Okay, so I get how you can get away with the 9:30 to 11 trades.
Yeah. Because it's very volatile. You're only scalping a point, and you can easily get a point.
And you find that to you as a very successful strategy.
Yeah, I've stuck with it.
Good. I like that. That's the strategy I'm following too. I love it. I love that you see the same thing I do. Just following the price action, like you say, price action. I call it order flow. Just watching the candle building and just play off the candles.
Yep.
So, Paul, we have a question from Lau. Yes, do you scale out of your contracts when it's going your way?
So yes. So if it's if you're starting to notice that it's going to be more of a trend day, then what I would do is I have another preset, which is say example, I have my 4 contract preset, right? Is that 3 contracts will exit out at my normal 1 point scalp, and I will have 1 contract continue to run. And what I will do is that when it hits my preset on my first preset on my my first exit point, then what I do is then I would then move my stop loss to my original entry. Okay, so which means that it's about a point down after it hits my first entry or my first exit point. So 3 contracts go out after that first scalp, and then I have 1 contract running long. I move my stop loss to my original entry point. Okay, so that means that it's 4 ticks below where it hit. And so to me, even if it comes back down, I'm at a break even no matter what, right? Or at a break even on that 1 contract, right? I got my 3 contracts at $50 a point. So that's $150 right there, right? So I would let that one run and then trail it by either 4 to 6 ticks as it goes up. I've tried using the automated feature where it's a trailing stop loss, and sometimes it works and sometimes it doesn't catch. And so to me is that's how I let my good ones run, but I only run 1 contract. I'm not going to let it run too much. And I move my stop loss again to immediately to my entry point. Hopefully that helps.
Thank you, Paul.
Yep.
Man, you guys are seeing this this develop right here. You see this big old candle?
Yeah, and also you have to look at time frames. So like example with ES is that when China comes online, which is usually about 8 Eastern, you'll start to see very active around 8 Eastern. No, Japan. Sorry, Japan comes online first. So about 8 Eastern, you'll start to see activity, and then you'll start to see at like 10 Eastern, China come online. And then what you'll see is then it'll either go sideways or not. I used to trade at night, and so at night, ES usually swings about 15 points in either direction. So you could pretty much know that once it hits, 15 plus points or above, unless some news dramatically happen, it's going to bounce off of that and bounce in between, 15 points on there. So to me, you look at nowadays at night, it can swing like 20, 30, 40 points. In the past, so I stopped trading. So that's why I focus my energies on 9:30 to 11 on there, and when I'm not working.
So we can say, in short, the way you can sort of predict some price action is because you put so much time into studying, right? Really getting to know ES, or
Right.
and just knowing the patterns, knowing what it likes to do, depending on the openings, right? The Japan Open, the China Open, Euro Open, and then US Open, right? So you take advantage of those timings, and that's why you trade from 9 to 10:30, right?
Yep. Also, you want to take a look at, if you're trying to look at a general sense of direction for the day, you look at the daily. And that's kind of how I've been posting on the chat group, is looking at the daily. And if you draw a line from example from the previous, okay, so go to the left a little bit to that first, right there above you. Oh, nope, go back. Right there. Yep. Draw an arrow directionally from that bottom of that first one. So the time frame is, nope, go to your northwest a little bit, right with that green wick. Yep.
This one?
There, and then draw it to the first dip up top, where it touches the purple line there.
This right here.
Nope. Let's see here. From there to where that first red wick hits the purple, the 383, the purple line there.
Right
Yep.
here.
Yep. So draw a diagonal line across there. So that's kind of when I looked at it.
Let's make this.
Make it thicker.
Yeah.
All right.
Extend.
So-
Do you want me to extend to the right?
Yeah, next extension, right? Okay. So if you look at that, that's kind of how I knew that when ES was coming down, I didn't expect it to go way below and break that line, which is what it did, right? And as soon as it broke that line, I said, okay, we're gonna have to have a return to the normal, and it's gonna look to go long, right? So when you look at that, is that every day directionally we're going to be looking to go long, at least for the short term. So that's kind of how I looked at my trades. Is okay, going into the day, I look at the daily and go, okay, where's it at, so that it gives me a general sense of direction. And then I look at the trades that are happening to make sure that it's going that way. So example right now, it's great that it's climbing up, but as you can see, it's starting to bump its head. Yep, it's starting to bump its head right there. So to me, you have to look at this next week, that if it breaks through that line that Gang drew there, that's great. We're going to hit new highs, right? But if we don't, we're going to have a reversion back towards that red line, that a diagonal red line like that. Exactly. So to me, is that Monday will determine if we're going to break through, or if we don't, we're going to head back towards that. So to me, that's how I look at it from a
Scary
long-term view.
times.
Yep.
Yeah, and the thing is, we never would really know because
Yeah.
this is we're approaching decision making time, right? And as this keeps getting closer and closer, then it just has to pop one way or the other.
That triangle is so scary right there.
Mhm.
Yeah. And
But
to
I
me,
think,
is that
but I think we're punching through though. I think we're punching through.
I think
But
we may
need a
punch.
big handle to punch through.
We may punch through short term, but I think long term, when the stimulus wears off, on top of example, student loans are being deferred until September. Mortgages, rent payment, and things like that are being deferred to so stops defaulting until later on this year. So to me, is that it may pop through, but the long term it's gonna revert back down
It's got to
significantly.
retrace. It has to retrace.
And then on top of that, what's going to happen is we're battling inflation. As much money as the Federal Reserve's pumped into the economy, inflation is going to rear its ugly head.
Oh no, we just got to load the boat right now for the 1.9 trillion that they pumped in the market. We just got, if it's positive, it's going to be a short bull run that we should try to capitalize on. I think that's what we all need to pay attention to, is that line. I think that it passes through that line. It might be a short bull run that the majority of us traders can make a good portion of our profits real quick.
What I'm going to say to you is that I would take the opposite view, because institutions, they always take out the retail trader, and Jimmy knows this, is that, and they'll try to take out the retail trader. And so that is every common retail trader's mindset, which is with the stimulus happen, and it's going to punch through. And what's going to happen is that it's going to take the opposite direction of
right,
that.
And get the rug pulled out of us.
Yeah, because here's the thing, is that the reason why it's climbed already is that, to Gang's earlier point, they're already baking
priced in.
It's already priced in. Exactly. So you see that it's touched that red line. It's going to revert back and start doing either a bull flag, or when it hits that cross section, break down and completely break down.
Yep. So it goes. It's either gonna
It's going to zigzag. Yep.
go up, or do this, and then boom. Right.
Yep. Now the question is, if you're looking at an Elliott wave perspective, where would, I'm starting to study Elliott waves, but where's the A, B, C, and D and E on this?
If we and let's zoom out. Okay, so
Yeah, that's the one thing I don't know yet. So I like to learn that too.
So let's zoom out. So let's take a look at this one. Right, let's clear this drawing. So for any Elliott wave people, let's go to the daily Elliott wave, right? So Elliott wave theory is the theory that it's sort of, okay, so think of it as like the ocean waves, right? Where the tide comes in, and then the wave comes in, and then it backs off a little bit, right? So this is wave one, right? Wave two, right? You can say that, I don't know if this would be considered wave 3 or 4 or whatever, right? But every time we have a run, we get some pullback. We have a run, we get some pullback. We have a run, we get some pullback. So this could be like the fourth wave or something for Elliott wave theory follower. And they're calculating like the distance between the last peaks, right? This could be or if you just calculate this right here, saying, hey, the last big drawdown. So basically, in short, that's Elliott wave. Is just them studying the study of peaks and their retracements and try to apply that into the future and see how far we can go. It's almost similar to, there is actually a drawing here.
Hey, Pal, so to go back to your point earlier, you were saying that as us as retail traders, we should take a more contrarian view that, okay, we think that, okay, we're going to pump 2 trillion into the market, but big institutions might try to just knock us all out and pull the price down.
That's what I'm saying is that as retail traders run into to buy in hopes of it going up higher, institutions will satisfy that by selling off their assets to gain that profit, right? And so to me is that's gonna that flood is gonna then drop the price quicker. And what's happening is that we with retail traders is that we have stop losses, and they to the question of order flow is that people see the number of folks that are trying to with their stop losses prevent and a significant drop, right? So as the price keeps dropping, what happens is that it's just going to tumble down from there.
Mhm.
Because I've been burned a couple of times like that. I thought exactly how you guys thought, which is, oh, cool, 1.9 trillion get injected into the economy, only to see that it will go red, and I wouldn't be surprised if
Mhm.
tomorrow it's going to open red, because the market's already baked in. Because all last week it passed through Congress, it passed House of Representatives, it passed through the Senate. And so it's already baked in. So to me, come Monday, I'm thinking it's going to take a contrarian approach where it's going to go down.
You already know how it's gonna play out, right? So then if everybody expected
Buy
it
the
to be
rumor,
up,
sell the news.
yeah,
Yeah.
everybody's expected to be up. If this was them expecting it to be up, somebody has to take something from here.
Yeah. So always taking a contrarian approach is that example, Federal Reserves, the FMOC meeting, things like that. I avoid those meetings, to trade those meetings, because you can't, it's the volatility of the directions. I can see it swing 10 to 15 points in either direction within a span of 2 minutes. Like literally it'll go up, 10 points, and it will go like back down 20 plus points within a span of 2 minutes when the meeting notes come out. And then the last, the 20 minutes after that, then things start to stable out, right? Because the news is now passed, right? So I try to avoid those unless you feel like gambling. Then you can just say, okay, I think it's gonna, go negative and do that. But to me, you're gambling at that point.
Right. I mean, I'm just asking because obviously I think we're. I guess I'm probably proving your point that I'm one of many that think, okay, SPY's going to be bullish in the long term. So how would this affect me if I wanted to take like a long SPY call, till like June, September, or even like a leap like next year?
Now, if you take a leap, I would probably go for a leap, but for a June timeframe, is that also you have to look at the market, because traditionally in the summertime, trades start to slow. You can ask Zong or Kang that is that the volume tends to go slower in the summer and then pick back up around September after Labor Day.
We can even take a look at for example, Tesla. It was a good example of this last year. From basically, you see this movement right here from April to uh to to July, nothing really happened. Right? Nothing really happened. We get little boosts, but nothing really happened. The big runs didn't happen until the last 2 months of the year.
Yep.
Right.
We basically just stay still. We had little boosts, but nothing compared to this movement. This movement literally is equal to this movement. And this
Yeah.
movement took like 4 or 5 months to develop.
Yeah. And here's what you guys have to look at is you look at institutional and hedge fund investors is that last 2 months of the year, they're trying to make up ground. So if they're losing their butt off at the last 10 months out of the year, that last 2 months out of the year, they're gonna be very aggressive to make their portfolios or their investors happy by getting a decent return. So you see a lot more volatility the last 2 to 3 months out of the year because they have to, get some return from for their investors, right? For their firms, right? So that's
Mhm.
what you see here is that, the first 10 months may be quiet or sideways, but then the last 2 months will be very volatile in either direction. This direction, it just happened to go bullish.
I think this goes back to the 80-20 rule that I talked about last Sunday. So 80% of the move, right, happens in 20% of the time.
Yeah.
Right? This big movement here, right? Basically didn't happen until the last 2 months of the year. But other than that, if this was like a normal year, we would have just seen Tesla be flat for the whole time. And then the last 2 months pop up.
So the more you guys trade, the more you'll get. And that's why I trade one or two things is that you get to know the nuances of the trade, unless there's some big news, right? Bad or good, it's gonna perform the same, right?
Mhm. Yeah. And I guess that going back to your statement of that you only trade the ES, 'cause you
Yep.
probably see how stable it is, and the different patterns that just repeats, time over time, and you can take advantage of that, right?
Yep. Because now, again, when you drew that line for me originally, now if you look at it now with the new low and draw from valley to valley, now you can draw that triangle, you know.
Like this, right? Make it thicker. And then
So you see how far that drop's gonna be to
we want it
to Kevin, to your point about retail trade and institutional traders, is that's how far the drop's going to be if we start seeing a trend to drop.
With
So we
three-
could come back to like 380 or maybe even 370
Oh, easy.
if they pull it back.
Yep. And it's going to come over a span of a couple of days. It's not going to, but
Right.
and to me, it may break through, but it's going to revert. It's going to come back. Yeah.
if
So be
anything, we could
careful
be
on Monday.
range bound.
Yeah.
You see this range right here? That we could say that this is the overextension, but we could see a range bound movement that you see this range right here. And if it doesn't respect this triangle, we could see it just do this for a long time.
Mm.
Yeah, until one of them breaks, the resistance breaks or the support breaks.
So if we were to try and trade this, if we were to try and trade the range, then we would just maybe wait for the dip. Then if it pulls back to 380, 375.
I would take the short. I would take the short, write it down,
Mm-hmm.
and then sell it and take the profit. All right, gentlemen, I got a phone call to take, but I'll talk to you guys later.
All right. Thank you, Pal, for
All
joining
right.
us tonight
Yeah.
and your insights.
Yeah.
I'll catch you later.
Yep.
Yeah. So, Kevin, as we see this happening. So, see this little weakness here.
Mhm.
So, we won't really know for sure if this is going to be support yet. But we do know that this is showing like it's resistance. So one thing to keep an eye on, and maybe it could be to your advantage, right? If you see a candle here that fails to break this still, maybe start looking for like a short, or for your puts. I don't know if you know of the spread, the ghetto spread, where you you sell a call against it, so it covers your long call on the downside, and then when it bounces off here, then you can cut that short
You
leg.
sell off that leg, right?
Yeah, and then you buy that leg back. You short it to begin with, right? You buy back, and
Yeah.
then you keep doing that, and that could be a way to lower your cost average too. That's one way that you can play it to keep you safe.
I actually exited out of all my long calls on Friday, so
Oh,
just want to
Yeah,
kind of
that's-
reset and see where we go from here.
Yeah, that's definitely a good idea, because like we were talking about earlier, we don't know what's happening here. Unfortunately, we closed on that Friday at the worst possible spot, because this is indecision here, indecision city for the last 2 days. We didn't break it, but we
Mhm.
also didn't fall from it.
Yeah. Well, we'll see where we end up tomorrow pre-market and how we open.
Mhm. Yeah, let's see. Man, I don't just going lower time frames. I don't like this. It's just red, 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 red. So let's see if it bounces here. You see, since we zoomed in, we can still see that trend line too. This is the resistance, I believe. That means the support is like all the way down here. Yeah. So if it falls, it'll be a number of days.
Right. Hey, do you mind if we analyze a couple of stocks? I don't know if
Yeah,
you're
for
up for that.
sure. Let's look at a few stocks. Today's topic was a little bit loose ended, because for stock predictions, there is no clear answer. There is no clear answer. There's no clear indication of knowing.
All right.
Even when you're right.
Okay, if you're gonna pick a stock, can I choose one?
Yeah. Well, I think Kevin had
Oh,
one in mind.
Okay, go ahead,
Oh.
Kevin.
Oh, no, it's all good. Can you look at AMD? I don't know if you already analyzed AMD in some of your videos this week.
Hey, because we got calls in those, boy.
Yeah.
We got
AMD.
calls in AMD, yo. I'm waiting for that run too, boy.
Yeah, just based off my trading and what I use, MD is kind of in a weird spot. Let me load everything up again. Okay, everything like how I see. AMD. So AMD, the same thing as before, right? It's kind of forming this. What's right here? You see the support, right?
Yep.
And so probably a bounce to somewhere as high as 86. So let me draw that for you.
I can live with 86K. Thank you.
Yeah.
If it hits 86, I'm happy, bro.
Yeah, this right here. You see, I have an order in too.
86?
See?
I want 100, bro. What are you talking about?
Yeah. So you
Man.
see this line right here. You see how it bounced off of it, a few times before. This is where actually it gapped up from too. So it bounced up from there, bounced up from there, and it's sort of in this range actually. If you look at it, this range between
Nice range.
95
Oh, that's a
and
nice bounce. I'll take that
Do
bounce.
it. I think John Lowe mentioned that they're releasing a new chipset this week, if I'm not mistaken.
yeah, which when they do some news like that, and and they catch hold of like traders ear, it cause it to bounce up. But we keep in mind we've been bouncing in between this range, so it could go as high as 95 and then check to see what happens at 95 because this range has been strong since
Can I give a theory on that too, Ken?
Mhm.
I think it's all preemptive. I think it's all planned.
Mhm.
Because if you look at it, AMD's been struggling there, right? AMD's been struggling there. They purposely left AMD to struggle there for the up and coming releases, so it'll push through to the next cycle. I think it's on purpose.
I mean, it could be, but unless we're insiders, we would never know that. All we know and what we can see is that there's this range, and at the bottom, currently, it's close to the bottom of that range. So
Right, but if
and,
you were a
and
company though, you know right now your stock is doing what? You're gonna drop, right? So if your stock drops here, you don't drop news, your stock drops. But if you drop news, your stock jumps to the next level. So it has to be planned. So if you think about it, if AMD's releasing news this coming week, it's got to be planned. It's got to be going up. That's how I'm playing it.
yeah, it could be. We don't know for sure. What is that? Last year. I don't know if it was this earning or this earning, but I believe it was this earning. One of them. But after the earnings, it was a good day too. You know, and AMD was playing with this range for a while. After this earnings, what is that? There was a merger or acquisition news that made it plummet for like the next 4 days. So we don't know if this is gonna happen again. If they did what you said, where they saw that they knew it was going down, and they wanted to wait for some good news here.
King, I know
don't
exactly
know.
where it is. See that head and shoulders right there at the beginning of the channel?
Right here, or wait,
Right
here?
there. No, the top of the head and shoulders right here. Right at the beginning. Right there. Right there. No, you're
This
faster.
right here.
The shoulder right there. Right there.
This one. This
Yeah,
one right here?
yeah.
Oh, yeah.
That's
Yeah.
all.
Yeah, this one right here.
Yeah, that's why I
Yeah.
said I'll take 86. I'll take 86 all day, bro.
Yeah, they made it plummet right here. So, if you see this channel, just play the channel.
Yeah. Dude, I take a call on 85 all day to take it to 86. Hell yeah.
Yeah.
But with
Well,
the news though, I think it might actually push up for a swing high, for a double top and fall down.
You're thinking it's gonna go up here,
Yep.
then
Yep. Yeah, they're trying to push it back up, but it won't go up because of the
Mhm.
economy.
It could be. We see. It's been struggling for the last few months too. Going back to look at the monthly.
Good shoulder, good head and shoulder pattern. Because if that's right, it completes it, and it's gonna drop.
So for the last since last August, it's been in this range. This is man,
Right, and
take
it knocked it.
advantage.
So let's see. So if we look at it, that's a triple bottom. It did a triple bottom, right? One,
Mhm.
1, 2, and the next one is the third one. Yep. And we did a one. See the tops. How many tops did we do there though?
1, 2, 3, 4,
Yeah,
5.
see. So is this the bounce back?
So it's really
up?
got to break 95.
Yeah, 95 is the price to
sorry.
break for AMD.
Yeah. Good
I
homework,
got
guys.
screwed playing AMD so many times thinking it would break 100.
Hey, you and me both, man. I've been trying for that break, man, but
That's it.
I'm scared. I
AMD's last,
just want
AMD's
86
last
or
one was probably
95.
like in September or August, right?
mhm. Just look at MU. This is what MU did for a long, long time.
Oh man.
See this right here. This range right here.
Yeah, look at that
MU,
consolidation. Look at that
Right here.
consolidation before the blast off.
Yep.
Yeah.
And I think
Maybe this is the
AMD might be doing
consolidation
the
for
same.
AMD.
Yeah. See, so it had a huge long run up and then boom, range bound for the longest time. And then all of
Yeah,
a
but
sudden,
you see
boom.
that? But do you see that explosion though?
Yeah.
They're from 45. Damn.
Never look back. Yeah, never look back. So made an attempt here.
Yeah, that's that Willy Wonka.
Yeah,
I
so
hope AMD does that, though. That'd be badass. If it does that, that'd be so awesome.
anyone else have anything else we want to look at? Any goalers?
I would tell you to look at my 2 favorite stocks, but I know you don't want to.
We
But
can look at it.
no. But can you look at the stock I was kind of interested in was Plug?
Plug?
Yeah,
Yeah. Plug is a crazy one.
right. Plug's are crazy. I just want to see if it's worth the play to ride it. If it's a play going back up, because that's a great return on investment right there. Risk to reward right there.
Mhm.
Because see
So
that channel is building down. If
Yeah.
that moving average crosses back up, that's a great bullish reversal back. That's almost a 50% return.
It's almost like this right here.
Yeah, that channel, perfect channel. As soon as it breaks out of that channel and it closes the next candle, I can see a swing back up. See if you guys see anything different.
If we can break it, man, I definitely think that this could go somewhere. If we can break this channel. But if not, we can continue. We might continue this down. But we'll see. Because it's struggling right here. This is the top of the channel. Right? Top of the channel is struggling. But let's see if it can close above it. If it close above this channel, man, this thing could take off again.
Right? Do you see what all the stock market is right now? Everybody is right there. If you look at every stock, it's like every stock is like that right now. You see how Plug is sitting right there? It's about to take off.
Mhm. Yep.
If you go to look at XPeng, it's sitting right there about to take off. Tesla is building in that inside candle. Every stock, if you guys pay attention, every stock is like that right now. See it? Every stock is an inside candle play right now. We are in the place where we're going to load the freaking boat and make a lot of money here in the next couple of days, or we're going to buy a lot of puts and make a lot of money.
Even Apple. Look at Apple.
See, everything is right there at that channel where it's going to break up or break hard down. See, everybody's at that
Amazon.
channel. The whole
Zong
market
says,
is at that channel.
Zong says his target profit for a plug is 55. 55
Great, I
right
got
here.
50 calls. That's why I got 50 calls for that. But that's what I'm scared of. Right now, that's what I'm looking at. I'm thinking it's gonna be everybody's right, every stock is right there. I think it's gonna be a big push this week. And we're gonna push it right out. Either we get smacked down or we're gonna go way high. Bro, tomorrow's gonna
Oh,
be
man.
fun. I'm telling you, tomorrow's gonna be so fun.
It's decision week, man. Decision week.
Yeah, it's gonna be
Everything
so
is.
fun, dude. I can't wait for 9:30 in the morning, bro.
Yeah.
Either we're gonna have a lot of runners or we're gonna be crying.
Yeah. See, even NIO, same
Yeah,
thing.
every stock is
Everything's looking
you
at.
know, every stock is right there at that 20-day moving average.
That danger zone. This danger
Yeah.
zone.
So it's building to that bull flag. Either we're bull flagging out of there or we're freaking cashing in this week because of the stimulus. And I'm just saying that we should all be ready that if we do cross that line to make the most out of the opportunity that we're going to get here.
Yeah. Let's do it. What is it? Zong says he's voting bearish. No, bullish.
Me too.
Yeah, he's voting bullish.
I'm rooting bullish all the way till Friday, and then after Friday, everything's gonna tank.
Bullish till this Friday.
Yeah.
Okay.
Let's see. I'm just watching right now. I'm just watching everything. I have a question. Somebody from Facebook asked me if I think it's a 50 at best 50-50, isn't it gambling? Why would you gamble? Well,
Because we play over and unders in everything. The stock market is just us playing red or black, up or down, over
because,
under.
the stock market also, because the stock market it's the only place where it's 50-50, right? If you go to a casino,
100% 50-50.
yeah, you go to a casino, the odds of you winning is probably like, was it 80 or like 90 to 10? Slots machine, you don't even consider it winning. So at best, 50-50, you can still win because you just manage your risk. If you have a 50-50 split, right, and you know how to manage your risk, then you can still turn that into a great thing because, just take my trading, for example. I have only like a 30% win rate, but I'm still making a killing in the market because, I manage my risk. I cut my losers really fast so they don't lose me a lot of money. And I let my runners run for as long as possible, so you can still win if you have
Man.
Can you explain? Can you explain something about when you cut your losses?
Mhm.
Can you shine a little bit about the psychology and about about learning how to cut your losses?
The psychology of it. So
No. Tell me how you deal with it. Not the psychology. Tell me how you deal with, like, when do you tell you? How did your psychology? How did you fight through that?
how did I fight through it? I just let it happen. I don't think about it. If you think about it and you say, "Oh, I want to be a winner," or "I want every trade to be a winner," you're already losing. So how I fought through it was, I had to take steps to it. Nobody just goes from, not losing any money to now you're losing some money on trades to the point of, hey, I'm losing $1 or $2 grand on a trade and I'm blinking. You have to take little steps. I started off with maybe, well, me personally, I started off with just one share of everything that I traded. To me, it did not matter the profit or the loss. It was just, hey, I'm going to get into a trade. If it's a good trade, I let it run. If it's not, I cut it. So then you get used to letting some of your trades play out. If they don't go your way, you cut it as fast as your stop loss takes care of it. You don't see it, you don't worry about it.
When did you learn? When did you learn to use your stop loss in your trading career? Then
When
how?
did I learn?
When did you learn to use the stop loss?
Well, after I lost 30 grand overnight.
Okay, see, that's exactly what I need to know.
Yeah.
That's the lessons, right?
Yeah. So if you don't use your stop loss and you're a complete beginner, you're gonna take huge losses, more than you will ever plan for. So it's better to just plan for a loss and take that small loss than to not have a planned loss and just let a small loss, initially a small loss, develop into a huge one, right? You think that something's gonna keep coming back and you keep hoping and praying, but nothing happens. Right? It keeps going down.
Your first loss is your best loss.
Yeah.
Wait, no, like in a trade, your first loss in the trade is your best loss. Cut it short.
Mm-hmm. Cut it short.
Like you said, I learned the hard way, just like yourself,
Mm-hmm.
thinking it's
And
gonna reverse.
yeah, in trading, you only have three possible. You should only have three possible outcomes, right? You're either gonna lose a little bit of money, you're gonna win a little bit of money, or you're gonna win a fuck ton. So if your trading has any other different outcome than those three, you're gonna probably suffer through a lot. So, even with a 50-50 thing, you can still win because you know that 50% of the time, you're 50% of the time, you're taking a very small loss. And the other 50% of the time, you're taking either a small gain or a huge gain, right? Use it to your leverage, not to your leverage, right?
When
So,
you
and
when you make your gains, right?
Mhm.
Are you making your gains as a trader, or are you making your gains as an investor?
Both, because the way I trade, uh, I'm more
Is
long
there a
term.
difference? Is there a difference though?
There is no difference to me because I would let my trades run for 3-4 years if possible. and so I don't see it as a difference between being a trader or a investor because you need to do your homework. So for me at least there is no difference, but for sure uh somebody who that needs to be the conversation that the trader has to have ahead of time. You know, they can't just get into a trade, have it lose big, and then tell themselves, "Hey, I'm gonna make this into a long term position." No, that's not how it works. You have to ahead of time before you even get into that position say, you know, if this is a winning trade, it's gonna be a long term trade. If this is a losing trade, I get out of it. It's short term, right?
So in retrospect, before you get into your trade, you already know if it was just going to be a long-term trade, which meaning a swing trade, a
Mhm.
long-term, or a day trade.
Yes. So somebody asked
Hey, mind if we take a
that.
look at a few more?
Yeah,
Oh,
for sure. Let me address this question first. So
go ahead.
somebody said that I heard stop loss is the most effective for day trade. Don't set stop loss for long for swing and long. What your thoughts? I mean, I don't know who told you that, but they're completely wrong. You're gonna set a stop loss no matter if you're a day trader, a swing trader, or a long-term trader. You need to go in with a with a planned loss ahead of time. Don't just go in, especially for a long-term trade, because those long-term trades are what's gonna kill you both, kill your equity and also your time. right? Your swing trades as well, because why are you gonna waste? Why are you gonna waste a few weeks on a trade that doesn't go your way when you could put it in your money and your time into a trade that is going your way, right? So have a plan loss. It's either gonna get stopped out right in a few days, or if it doesn't get stopped out, you're gonna be your stock's gonna keep going and make you a lot of money in return. So having a stop loss is effective both short term trades, being day trading and swing tradings, and long term trades where it's position trades where you're gonna be trading a few years or a few months out. So I don't know who told you that a stop loss is not effective for swing or long term trades, but uh, no, I'm a long term trader and pretty much a swing trader too, and I don't ever get into a position without setting my stop loss. Okay, so that I hope that addressed. I don't know if you guys have anything to add to that too. If you guys use stop losses.
Long term, I don't use a stop loss. I will use it sparingly. Um, kind of like space, right? Space was a long term, super long term speculation. I didn't have a stop loss on it, but I got it below 20. But when it was over 50 and in the 60s, I did put one at 50 just to, because the move was, there was no, nothing really for that move. So I did put one, but all my long terms, I don't have it. I did take a hit with space because I didn't hold it the full year. It was pretty close. We only had a couple weeks until I got to the year mark, but I didn't get to the year mark because it got triggered. But for long term, I usually don't use it. I don't use it because you're holding it long term. There's no point. Right? If the company goes bankrupt, then there's nothing you can do. But the reason you get long term is because you're in a stable company. So it's not. I don't use it for day trades. Yes, swing trades. I do swing trades, but long term, very, very rarely.
Zong, would you also say that your long term trades, you try to get them close to their lows too, right? So that's why the reason why you don't really get put in a stop loss.
Yeah, I mean, yeah, you always want to get low.
As low as you thought it was gonna go, right?
Oh yeah, because after a few years, you're like, you're so far behind. You can take a 10-20% correction. It's fine.
Mhm. Yeah. So that's sort of not a stop loss, but yes.
Yeah, I mean,
Because
long
you got
term,
it
you're
in so long. Yeah.
yeah, long term, you're either in or you're out. That's it. There's no, you're not trading. It's not a trade. It's you're investing. So.
So I think the user, I can't really see their name because they didn't register that link, but they asked what percentage of your stop loss? Is it 10% stop loss? I'll give my take on that take first. So you want to position your stop loss so that that position doesn't risk more than 2% of your account. So if you have a $1,000 account, you're from that position, when it gets stopped out, it should not cost you more than $20. Right. So um, that percentage that some people say, it could sometimes if 20% could be more than 10%. So where it could be less than 10%, like 5 or 2, but just make it so that it's no more than 2% of your total portfolio's value. And that's what I always do. Zong, do you have any input for that?
It depends on what you're trading and how much you're trading. um, right? If you buy at a support level, and you're watching that thing, and then you see it's supported right there, you can get away with a really really tight stop loss, on a day trade. Um, the easiest way to do it is to calculate the actual dollar amount of your risk. Right, so you calculate $100, and you're 10 cents away from the support. Then you're buying 1,000 shares. You you got 10 you got 10 cents to give. So you put your stop loss at 10 cents, right? If you need more than 10 cents, then your position is only going to be 500. Like 500, then you'll get 20%. You get 20 cents as a stop loss. So you could do it by percentage, or you could do it by dollar amount. So I usually like to do dollar amount, figure out, uh, what's the risk going to be for the number of shares, and then just positioning accordingly.
Yeah, I guess I can show an example. So say this is Apple and I'm looking to get a position, right? Now, if my portfolio or my account was only $1,000 and I see that there is support here, I wanted to, and I don't want, I don't want it to fall lower than 115. So let's say 115 is here, and current price is around 121. So to me, let me pull my calculator. Right, 121. Let's just say 121 for all round number minus 115. Right. So that's a $6 loss, $6 risk from here to when I get stopped out. Percentage, 6 divided by 121. That's a 5% risk on that position. But I would still position that so that it's not more than 2% of my account. So if I have $20 to risk and each share is going to lose me $6 if I get stopped out, I can only get safely 3 shares that I can hold. So if I get stopped out, I only lose a maximum of $20 or around $20. And if it keeps going, well, that was what I was willing to risk. Right? So that's how I do it. I don't know. There's a number of ways you can do risk management.
When it starts to hurt, then that's when you exit.
Yeah, so always have a stop. I always have a stop because I never know. Even if I think it's a long-term trade or say it's a long-term trade, because I always want to get into winning positions. I never want my losers to get out of hand. Worst thing you can do is buy Apple and then at 140, and 10 years later it'll still be at 140 because it went down and up for 10 years.
Yep.
All right, let's see. Want to look at Kevin?
I had a few, so I don't know if maybe we can move a little quicker, I guess.
Sometime.
Tilray.
I hate myself. I hate myself.
Well, definitely Tilray. If you're playing off the daily, I think you are in a good spot. See this right here. This support line that it kind of bounced. It went down a little bit. It came back up, and it's holding above it. one way you can look at it. You already in a position, right?
Yeah.
Yeah,
Yeah, I
think
mean,
it's still pretty
mean,
good.
I got the and this is Zong approved. You know, the 27 strike for April 1st.
Okay, so April 1st. April 1st is right here. So 27, right?
Yeah.
27 is right here. April 1st.
April
Oh,
1st.
no.
Let me check.
I'm biased, so I won't say anything.
Yeah, I see it. I
It is.
see
It is for April 1st. Yep. Yep.
Yeah, there being a support here, so I mean, I think it's a good play. Just also have some has some risks under here to get out.
Just remember, guys, every candle on pretty much every stock is ending like that. Because even with Tilray, see that? The candles, it's an inside candle play too.
Yeah, right here. So this wick has me concerning, but watch to see if it can hold above. If it can hold above this, then it might be in good shape. If not, make sure you don't hold through the pain.
Right. Next one is PLTR.
PLTR, good old Palantir. Well, the good thing about Palantir is it actually closed above its 20 day. But it's doing the same thing the other stocks are doing, you know.
Yeah, every stock is doing the
Every-
exact
yeah.
same thing, guys. It's trading in that channel about to break out or break down really hard. So be careful.
Sort of something like this, you know. But let's see. Let's just see. You know, we don't know for sure what's gonna happen, but hey, if that's a
We
good
should
sign,
have two plans going in this week. We should have two plans going this week saying that if it's a bull market, then we be bulls. If it's a bear market, we should be careful.
yeah, I always go into the market with that mindset. You know, be a bull and a bear. Be a trader. If there's a direction, we are
Yup.
gonna win.
Yep. Let the market decide what it's gonna do and ride it.
Yeah, yeah. Like I think Zong says the best. You know, we are traders. We only need movement.
Yeah.
Well, I might have put myself in another perilous position here because I have covered calls that are expiring this upcoming Friday for the 27. So either it gets called away or I'm going to collect some premium.
Yeah, or if tomorrow you see it below 27, maybe you can roll it out, or and if that
Yeah.
tickles your fancy, you can. There's multiple ways.
Yeah.
But look
The
at
next
that
one I had in
That's
mind.
a beautiful hammer,
Right.
though.
Yeah, this hammer right here. Yep. Shoot, Kevin.
Fubo.
Bobo.
Uh-huh. I don't have a position in this, but I was looking at the daily and it looks like it could be primed for a move up.
It's at the top of the
Could be.
channel again.
Yeah. It's every single stock has the same look.
I'm
that
telling you
I've
guys,
seen.
it's at the top of the channel
It's
on
so-
every stock.
Yeah, it's so dangerous. You know, I wish there was a different pattern that we can look at this week,
I know,
but
there's
every
no other
single stock
pattern.
looks like this. Like,
Hey,
look,
let me give you one more then. PACB. Pack Bio. I just want to see if it is the same.
ABC, ABC, or what is it?
Oh no. PACB. Pack Pacific Bio.
PACB.
Might
Same
be the same
pattern. I'm
The
telling
same
you guys,
exact
we're
one.
at the top of the channel. I've looked at all my stocks. We're at the top of the channels.
Yeah, what is it? Zong says 80% of the stocks in the market follow SPY. Just calculate data for the SPY. Yeah. Yeah, I mean, everything
What
has
is
been following.
what is calculating beta though?
Song. Can you explain beta?
But now,
And
but now
I know a
you gotta
little bit of beta.
understand that this week we're at the top of that channel that we should be, that if it turns bullish, we can make a lot of money.
Yeah.
Beta is how fast the stock moves compared
Yeah.
to SPY.
That's as much as what I know too, but I don't know how to calculate that out. You know, I know it's a relationship between two stocks and how they move in relation to it, but I don't know how to calculate it out. Uh,
Man.
Here, I got the perfect gift for you, Zong.
Come on, y'all.
Yeah, but yeah, that's my extent of knowing beta. Beta is just like a relationship between, basically you can do it between any two stock, but most common one that people do it against is SPY, because SPY contains like 80% of the stocks, right? So they do it in relation to SPY, and how much the SPY move will trigger a move in that stock. Okay? But I don't know how to calculate out that relationship.
It's all right.
Yeah, maybe that's homework for me to do so we can share and learn how to calculate out beta. All right. If
Okay.
let's see if anybody has any more. If not, then we'll probably end the session here. I know the last few, because just the topic itself is a pretty difficult one. Predicting price is always it comes down to it. Predicting price, stock price, is all about how well you know the stock, and how it behaves to global news, to a certain technical. So being able to predict stock price is you getting really intimate with that stock and knowing how it's going to handle. Um, so nobody can accurately, to 100% accuracy, be able to predict anything that's going to happen. At best, we always have our risk management to keep us safe. Yeah. All right.
Thank you
then
guys. Thank you guys for all the hard work tonight. Thank you guys for all the answers.
Yeah, for sure. We'll see
Yep.
you guys
Thanks,
on Monday.
gang.
Let's make some
Thanks,
money.
Heck yeah, dude.
Let's make some money. Come on, everybody.
Hell
All right.
yeah,
Let's make some money.
Whoa.
See you guys all tomorrow.
Tilray's going to 65.
All right. See you guys all tomorrow. Have a good night.
All right. Thanks, Kang. Thanks.